and a lovely venue, and I must say, a great looking crowd. Thank you very much for coming, guys. We're going to start with a bit of a story, if that's okay with you. About 19 kilometers that way, I believe, between Almont and Pakenham, a Canadian National Railway crew was clearing brush beside the recently laid train tracks there. It was a hot, dry, and windy August day in 1870, much like this last summer. And the crew made a fateful decision. They decided to burn the debris that they'd collected. And predictably enough, an errant spark soon started a wildfire, which turned into a major fire. And within hours, that fire was rushing through the treetops, burning up the Carp Ridge, and fanned on by the westerly winds, making its way to Ottawa. It was 1870. Stittsville was almost entirely wiped out by that fire. Bell's Corners was largely destroyed as well. Can you picture it? The heat, the roar of the fire. Can you smell the smoke? The fire burned so hot that it literally consumed the topsoil that covered the limestone that was just about a foot lower. Burned it up. And when the smoke cleared, what was left, what remained, was called and is still called the burnt lands. The landscape was permanently changed. Topsoil was gone. Much more recently, just 3 years ago in San Francisco, another spark got out of control. Still currently burning its way around the world. OpenAI released ChatGPT. And that spark shows no signs of slowing down. It's working its way through every industry. And today, we have front row seats to the most consequential technological revolution in history. And that's not actually hyperbole. So my job today is to give you all a bit of a vision for what this kind of amazing future is all about, this future that we're building today. And I want to be clear about something right away, just so that nobody's surprised. This is not just about tech stocks, all right? This is so much bigger than just tech stocks. Now, remember that CNR crew. Between 1840 and 1910, the world went through the railway boom. Fortunes were made. Some fortunes were lost. There was plenty of speculation along the way, and there were some crashes. But here's the important point that I really want us to remember. The infrastructure got built during that boom that powered economic growth for the next century. The tracks were just the start. You got to remember, the stations were put in the middle of nowhere. So what gathered around them was first the telegraph and then towns built up around this infrastructure. That powered economic growth for over 100 years. And AI is our generation's railway moment. Now, some of you, the history buffs in the room, probably remember that the last spike was driven in on November the 7th, 1885 in BC. But I want you to imagine Canada 20 years before the last spike, okay? Imagine that you're in Montreal and you're trying to get to Vancouver. You got two choices and they're both bad, okay? Choice number one is you take a steamship to Panama, take the train across to the West Coast, and then take a coastal steamer all the way up to Vancouver. I mean, it's better than going around the Cape Horn, but you know, it's a bit of an inconvenience. Option number two is you take the train, the U.S. intercontinental train, from New York through Chicago and wind up in San Francisco, get back on that steamer, and find your way up to Vancouver. British Columbia joined Confederation in 1871, specifically on the promise of the railway being extended to them. It took 15 years, but that was the deal. When that spike went in, everything changed. Within days, of course, cross-country travel was certainly much more available. But beyond that, by connecting the young nation, remember, Confederation's 1867, right? This is literally nation-building technology. And as the train made its way west, it kicked off a real estate boom as it stretched its way west, right? Towns, as I said, grew around those stations. And cheap land suddenly had more value than it had previously. Manitoba wheat eventually made its way to the Lakehead terminal and then on to Europe. Here's the key point. The real money wasn't made in the companies that laid the track. It just wasn't. Sure, CPR and CNR were and remain good investments. But the extraordinary returns came from what the railway made possible. Think about grain elevators. Think about mining companies. Think about the hotels, the banks. Oh, the banks. Think about the banks. Think about the insurance companies. All of this was possible because of the technology and the infrastructure investment. The railway didn't just connect places. It multiplied the value of everything it touched. And I think that's the promise of AI. And it's the promise of the related technologies, blockchain, cloud compute, battery technology, robotics, all of the things that are using this technology stack. Now, I bet I know what some of you are thinking, because I've had this thought too. There's probably a little voice in the back of your mind that says, but Glenn, what about Trump? What about tariffs? What about the trade war? I'm reading all this about a tech bubble. This whole AI thing feels a little bit overwhelming. You know, honestly, Glenn, I'm kind of just thinking of sitting this one out. I understand that. So I have a little exercise that I want you to do. This is a kind of a participation moment so you don't fall asleep. I want you all to put your hands up in the air. Everybody put your hands up in the air. Now I want you to take your hands and just tuck them in under your thighs. Okay? Just tuck them in under your thighs. Now take a look to your left and your right at everybody sitting on their hands. Just try to get a kind of a freeze frame moment of that in your mind. And hear me say, this is what I don't want you to do. I don't want you to sit frozen, to stay paralyzed. You can take your hands up. I don't want you to sit on your hands while the biggest wealth building opportunity in our generation unfolds around us. Does that make sense? Those concerns, all the tariffs, everything else, those concerns are going to be why many, many Canadian investors miss this. And you know what? It's actually always this way. The critics in 1881, you know what they called the railway? You're going to love this. A useless ribbon of steel. A useless ribbon of steel. Now look, let's be fair. Let's be fair to the critics and the cynics. It's not like they were entirely wrong, right? I mean, they were complaining about the costs being massive. They were complaining about the speculation that was going on. There was speculation. They were complaining about the number of people who died building it. Tragic, right? So the risks were obvious. And they weren't wrong to point out those risks. They were still catastrophically wrong, weren't they? They were wrong because they focused only on those short-term risks and didn't look far enough along the horizon to see what the opportunities that came with it. Friends, I'm going to tell you that we're in the AI boom. We've been talking about the railway boom. We're in the AI boom. And remember, in my estimation, we're at about 1871. That's kind of the frame of reference. Remember, that's when British Columbia joins Confederation on the promise of the train being extended. So I would say, once again, we're in 1871 of the AI boom. And what that means is that the tracks are still being laid. The stations, in this case, data centers, the size of small cities, are being installed. Power grids are being upgraded. This level of investment is happening at a pace that would make the railway barons envious. The cynics couldn't see it then, and they won't see it now. They only see the costs. They see the disruption, and they wonder, is it all hype? Look, by 1890, it was obvious that the critics were catastrophically wrong. I don't know about you, but I wouldn't have wanted to have been an investor, a person who thought the transcontinental railway was just about steel and hot air or steam, right? If I was living in that age. This moment is about what becomes possible when the infrastructure is actually fully in place. When AI capability becomes as abundant and as accessible as railway transportation in 1890, things are going to get very, very interesting. What lies ahead is exponential growth. And even saying that, there's a problem that we humans have when it comes to understanding exponential growth. So let's go back. Let's go back for a moment to the Great Fire of 1870. And imagine when residents in Stittsville first smelled smoke, their instinct was probably to watch and wait. But here's the problem. The problem was that the fire had been growing exponentially. It said that if the fire was moving faster than the rate at which a horse could gallop. And so farmers, consequently, to save themselves, they had to jump down their wells or jump into the river to try to get out of the way. Exponential growth has a way of surprising everybody. It did in 1870. It did during the pandemic. And it's probably going to do that again in the AI boom. Think about this. Let's turn this back to OpenAI. ChatGPT announced last week that they have reached 800 million weekly users in less than 3 years. Now, there's this little thing called the internet. It took the internet 13 years to reach 800 million weekly users. And OpenAI's user base is doubling every 8 months. And that rate of doubling itself is accelerating. It's bananas. Now, let me try a different way of trying to help you understand the exponentials. Got to use your imagination for this. I want you to imagine a library, a really big library, containing the whole corpus of human intelligence over the last 6,000 years. I mean, it's huge. It's bigger than the Pentagon. Now imagine this. Imagine adding 2 more Pentagons next year. And then, 3 years later, imagine adding 16 more Pentagons. You see, every single year, AI systems now create more new written content, more fresh ideas, more insights, more analysis than the entire written corpus of human history combined. It's not slowing down. And those numbers that I calculated for that, I probably actually sandbagged it. Here's what I did. I assumed that 99% of the output of AI over the next several years is really just going to be a rehashing of existing knowledge, or think of it as cat videos, right? Just kind of nonsense. So if just 1% of the output of these AI models provides new knowledge, that's how we get the 16 more Pentagons. Now, ask yourself this. maybe you have your own views about AI, everything else, but ask yourself this, at a fundamental level, if human knowledge is about to inflect higher, is that a good or a bad thing? I mean, hands up those who think that faster and more drug discoveries would be a good thing, Glenn. Anybody think that? Yeah, my hand's up for that. Anybody think that more and more abundant and clean energy would be a good thing? I think that's okay, right? And you go down the list, scientific discovery, material science, all of these things, we're going to see remarkable growth in. I literally just saw yesterday, Google's DeepMind announced that their AI had postulated a novel drug treatment for cancer, and the lab has just confirmed that that actually is efficacious. So this is again new knowledge. Okay. So just like the forest fire, this exponential growth that I'm trying to help you understand, it sneaks up on us. So I ask you again, can you smell the smoke? Can you smell the smoke? Let's say you can. Let's say you can smell the smoke. So what are you supposed to do about it as an investor, right? Forgive an old architect for using a building analogy, but I want you to think of a 3-floor building. The basement level of this building, kind of like your basement. That's where your furnace is. That's where the electrical panel is. That's where the sump pump is. So this is the physical layers of things. So in our case, it's the power plants. It's the upgraded electrical grids. It's the shells of these massive data centers that are being built out. This is the infrastructure level that supports the entire AI boom. Now, if you go up the stairs, you get to the main floor. And in the main floor, I want you to imagine that this is kind of what most people think of. This is the actual compute. So these are the racks and racks and racks of NVIDIA GPUs. And this is where the hyperscalers, so this is Microsoft, Amazon, Meta, and Google. This is where they're actually doing the work. They're taking electrons in, they're running it through their AI models, and what comes out the other end of this factory is intelligence. Okay? That's the main floor. But there's one more floor. So let's take the stairs. We go up to the second floor. And on the second floor, guys, AI isn't a gadget. It's actually operating leverage for existing businesses. Think of it this way. When costs drop and throughput rises, margin grows. So that's what's going to be happening on the second floor. And if you multiply that across the banks, the utilities, the telcos, you start to add up enough productivity to generate a shock, a productivity shock that could actually goose GDP. Most investors, when we talk about the AI boom, they're only thinking about that main floor. At Evans Family Wealth, we're thinking about all three because we believe that the real money comes from seeing how these interconnections work. It's kind of like the railway that way. It's not just about the tracks. It's about everything that they enable. Now, let me catch you up a little bit on the progress that these artificial intelligent large language models have made since that spark, since OpenAI's ChatGPT moments spark. A couple of years ago, these AI systems, I mean, they were useful, but the best way to think about them is that they were kind of a fancy autocomplete. Okay? So you would ask your question and almost instantly you would get your answer. It was pattern matching and it happened in seconds. But it was prone to hallucinations or not telling you the right thing sometimes, which is a bit of a problem. Then something fundamental happened in the last year, year and a half. And that is that these models began to think and to reason before they answered your question. So think about it this way. You ask your question and the large language model thinks it over and tries to break down your question. What are they really asking? How can I actually go about answering this? It tests the output that it's going to give, and then it generates your output. That was a huge improvement in the quality of the output. But now, I know probably when some of you hear that these models are thinking and they're reasoning, you're probably having in the back of your mind, maybe some of you at least, a kind of a flashback to Arnold Schwarzenegger wearing, black sunglasses, I'll be back, and doing this is the Skynet moment, right? This is Terminator. Are we at the point where these AI systems are going to go rogue and start World War III? Well, to help answer that, let me just kind of, once again, level set us on what these systems can actually do today. All right? We're not at Skynet, at least not yet. Here's, I think, the best way to think about what these things can do. I want you to think about these AI models as really smart, kind of nerdy interns. Okay? Right now, it's said that they can handle between 50 and 70% of what we call professional work. So they can reliably draft professional work, but they still slip up from time to time. They can do about 50 to 70% of it. In other words, they can't do all of it. And so that's the best way to think about these, is that they are force multipliers. They're interns, but they still need supervision. And I draw that distinction. First of all, when I'm talking about professional work, I'm talking about law, I'm talking about finance, I'm talking about management consulting, and I'm talking about medicine. If I was talking about software development, AI has already solved it. It's already at the expert level. So in the large domains, in the professional work, think of these as interns doing about 50 to 70% of the work. Pretty good, right? Pretty impressive. Here's something also impressive. At the start of this year, they were only doing about 25%. So they've literally doubled their efficacy over the last year. Something that I have to remind myself sometimes, because they still can be frustrating. When I'm vibe coding or I'm working with these things and I'm a little frustrated at the output, I have to remind myself, I say, Glenn, this is the worst that these will ever be. And that's true, because every day, every week, every month, these things are getting better and better and better. And the expectation is that they're going to achieve that 30 to 50% difference that they're not able to provide right now, and even surpass that is the expectation. So how should you think about this? I think you should think about it this way. Seconds of compute gave us autocomplete. Okay? Minutes, this kind of reasoning, minutes to hours of compute have given us the capability of digital agents and interns. But months of compute, weeks and months of compute are likely to generate fundamental breakthroughs. I mentioned the Google DeepMind project. Now, let's get candid about something, because you might agree with all of this. You might say, yeah, Glenn, I get it. That all sounds reasonable. But have you seen those stocks? I mean, they've just gone straight up. Surely this is a bubble. Surely they can't keep going. I mean, we missed it. Oh, well. So let's get candid and talk a little bit about the elephant in the room, which is this question. Is AI a bubble? I bet you've heard that or thought that, wondered about that. I mean, how many here remember Nortel and the tech crash? Right? Look, I still have post-traumatic stress about Nortel, let me tell you. So I get it. It is natural. It's appropriate for us to have worries that AI might end the same way. And who the heck wants to go through that again? So where are we? Look, here's what I would say. I would say that if this was a bubble, if we were in a bubble currently, you'd expect to see really fragile balance sheets and waves after wave of IPOs. That's what happened during the tech bubble. They were basically raising money from mom and dad, handing it over in a new business format to Cisco, and when the money ran out, so did Cisco's sales. What's happening this time is that NVIDIA's revenue has gone up almost 10x over the last 3 years since that spark came about. But here's the big difference. They're not getting those funds from IPOs. Who are their big contracts with? They're with the hyperscalers. They're with Microsoft. They're with Google. They're with Meta. And they're with Amazon. And those companies are the largest companies the world has ever seen. And they're paying for it out of cash flow. They're not borrowing money. So, Microsoft isn't borrowing money to buy chips from NVIDIA. They're funding it from cash flow. And they're only using about 66% of cash flow. They're not even using all of their cash flow. We have to remember, these are cash gushing companies. All right? We've never seen anything like it in the history of the world. So the important point here is we're not seeing debt and we're not seeing equity dilution. And even if I look at this from the perspective of market valuations, everybody's an expert when it comes to market valuations. But if you look at the current market valuations of these companies, you'll find that they're very much in line with where they have been historically. That's not to say they're cheap. These are the best and most profitable companies on earth. They don't get cheap. Let me give you one little geeky fact. If you normalize the current price equity ratio, the PE earnings, what you'll find, if you normalize that by the growth rate, what you'll find is that the biggest of these companies, the biggest provider in this space is NVIDIA. They make the GPUs. And they're trading at about 1.5 times as a PEG ratio, as a price earnings growth ratio. Anything around 1 is a screaming deal. And anything below 3, between 2 and 3 is fully valued. Over 3 is where I would be concerned about being overvalued. Okay? And these companies are just not there. The MAGS 5 right now are under 2. So by any kind of metric that we would use to at least analyze prior bubbles, this just categorically is not a bubble at this moment. Now, as I've said a couple times, we're in year 3 of what I believe is the most consequential technological revolution in history, and critics are already screaming bubble. And that's actually a good thing, because you can imagine with these handful of companies that are under the microscope of so many different analysts, the magnifying glass of so many analysts, we will know very soon if there's any major concerns in this space. So I'm not overly worried about this. I would acknowledge that if you're a student of financial history, you know better than to dismiss overvaluation concerns, right? I'm not saying this can never happen. I'm saying that based on the evidence of today, recognizing that my number one job is risk management, I'm not overly concerned. Listen, I've been doing this a long time. With a lot of you a long time. I've seen bubbles come. I've seen manias. We've lived through some crashes. And for what it's worth, I'm not worried about AI right now. The railway boom, again, for context, the railway boom took 60 years to play out. 60 years. AI feels similar to me. I'm not saying for 60 years, but I am saying that I think this has years left to run. And as active managers, it will be our job to manage the risk through this cycle. So again, I come back to this and I say, the question isn't whether AI will transform the economy. That's already been decided, folks. The question is whether we will participate. Or will we let fear keep us on the sidelines while this transformation, the biggest of our lifetime, unfolds? So let me bring this home a little bit to kind of give you a reflection of how we're using AI in our own practice. We're a small team. Most of you know that. We're a small team. And so for years, we relied on writing software and using software to help us compete with the big dogs in the space. And so without getting too granular, Every night we download 2,500 different stocks. We download all kinds of different metrics about those stocks. Our systems run through that. We have machine learning based models for all of that. And that gives us an output every day to our portfolios on whether we should be making any changes. And because we have that technology, we've built that technology, 40,000 lines of code, we feel confident and our results show that we can compete with firms that have much larger staffs than that. But now I get to add digital employees, the best kind of employees, because I don't have to pay them. I don't have to pay them very much. So what are we doing with AI agents? Well, we've got an AI agent that is looking at economic news releases and trying to help us to understand whether or not the totality of those releases should change our view on the outlook for the economy. We have one that reads the earnings transcripts of the companies that we own and the companies that we're thinking about owning, and does sentiment analysis to try to analyze whether or not management is having more confidence or less confidence in their outlook. One that I really like is monitoring what the hedge fund managers are buying and selling. And we like to see what the preponderance of that activity is, especially if they're selling a security that we own. I'd like to know about that. So these AI agents, they're not replacing me. They're empowering me. They're reducing the grind for me. And that gives me more time for calls, more time for meetings, more times for events. So it's tempting when I'm talking about this to kind of think, oh, this is going to change everything. And I think there I got to push back a little bit. Because there's that saying, the more things change, the more they what? Stay the same, right? And so I think that something that we have to be careful about, as enthusiastic as I am about all of this, I think something that we need to be careful about is that it's tempting to think that this tech will change everything, but it's really probably not true. And I think you need to look no further than in Canada, the big 6 oligopoly banks, okay? And just take your mind back in history. Remember when ATMs were a new thing? Some of you guys don't actually know that ATMs weren't always here. But ATMs back in the day, remember Interact banking? Online banking, mobile apps, all of these things were supposed to be disruptive to the Canadian banks. Yeah, it didn't work out that way, did it? In fact, what happened is, they closed a bunch of branches. They got rid of a bunch of tellers. They moved those tellers into associate roles or into roles that generated more revenue. And all of those savings went straight to their bottom line, which allowed them to increase their dividends and post better earnings. And if I'm honest with you, I have to say that shift, I think that the shift with AI is going to rhyme with that history. I expect that the banks and these oligopolies are going to report better service with lower costs and hence higher profits and probably better dividends as well. Because those AI cost savings are going to drop right to their bottom line. So in plain English, no fancy talk, here's what I think so these are the companies on the second floor. Here's what I think the incumbent companies who are leveraging AI are going to be able to do. They're going to be able to get more done for less. Who doesn't like that? They're going to be able to treat their customers better because they're going to know more about you. Mixed bag, but probably still good. They're going to be able to catch problems, identify risks, if you would, and catch opportunities faster. That's also going to be good for earnings. And if they don't do that, they're going to die because their competitors will. So what about us? What are we doing here at Evans Family Wealth? As you all know, our approach is a bespoke approach for each client. We're not a cookie cutter, one size fits all, everybody gets lumped into the same thing, okay? We're focused on what I would call, for lack of a better term, the 3 Ds as we approach this AI boom. So we're going to be disciplined, we're going to be diversified, and we're going to be disruptive. With respect to discipline, remember I mentioned the building and owning all 3 floors of the building. Yeah, that's what we're going to do. We're going to own the power infrastructure plays. We're going to own the hyperscalers and the companies running the models. And we're going to own the second floor companies that are utilizing this to enhance their returns. And again, that's the lesson that we think we learned from the railway boom. It's not just the tracks. Implicit in that, but I'll make it explicit now, is that we're going to be diversified. And that means that we're going to balance the growth, all of this excitement, with the safety of holding some gold. We'll hold some digital gold. We'll hold some Bitcoin. We'll hold commodities. We'll hold bonds. Less than before, but we'll hold bonds. And we do that. We own all of these different things, guys. Not because we're gloomy, not because I'm doubting myself with respect to the AI story. We're diversified like that because prudent people fasten their seatbelt. It's not rocket science, right? By owning the best of those companies, that will also give us diversification into US and international exposures. So again, diversification is key. Finally, disruptive. So here there's kind of two parts of this. The first is that we're going to evolve the structure of your portfolio to reflect the AI boom on your terms. Remember, it's bespoke. It's not one size fits all here. Some of you are going to be more keen about doing this than others, and that's completely fine. But we're also going to be disrupting our own management and our own capabilities. I mentioned the digital agents that we're using. I sometimes joke with you guys that I eat my own cooking, right? I'm invested. If you're invested in my advisor managed models, I am too, right? And I'm trying to get better at that work myself. And you guys will benefit in that process. So let's wrap this up. When the Great Fire of 1870 swept through and razed Stittsville, apparently one building was left standing. And I bet you some of you have been inside it. Anybody been to Caboto's fine Italian dining on Hazeldean? Yeah, that apparently is the one building that was left standing. William Kemp apparently built it. And he built it out of stone, not because he knew a fire was coming. He built it out of the limestone bedrock we talked about because stone lasts. And for Brianna, Ann, and myself, in our business, that bedrock is your trust. Our motto is our family serving your family. And you know, what I realized in preparing for this is that serving isn't necessarily telling people what you want to hear. Serving is being willing to tell you what you maybe need to hear, even if it makes you feel a little uncomfortable, right? I'll be honest, there's a part of me that I didn't really want to go this deep into some of this because I know that for some of you, this is going to be a little uncomfortable, right? This is going to be in areas that you've got a bit of scar tissue at from Nortel and from other events. And I understand that. I totally understand that. But you know, I suppose I could have been taken, the easier path here would have been for me to try to play the smart cynic and to try to score points that way. But I'm reminded of a quote. And here's the quote. It says, cynicism masquerades as wisdom, but is the furthest thing from it. And then this is the part I love. Cynicism is self-imposed blindness. That's Stephen Colbert. And I'm just not going to turn a blind eye because it's uncomfortable here. For me, that would be betraying your trust. So, we say nobody cares like family. And I care more about making sure you don't miss what I think is going to be the most important wealth-creating opportunity of our lifetime than making you feel a little bit uncomfortable. You see, because 10 years from now, when we're sitting together and we look back at all this, I want us to feel really good that we made the right decision, that we made the right call about this opportunity. And again, that's going to look different for every one of you. We will take the time to find what is the right mix for you. And whatever that mix is, our message is going to stay the same. We have front row seats to the greatest technological revolution in history. Let's not waste them. I really want to thank you for your time today. Brianna, Ann, and I are so thankful for each one of you. It really is a delight. I'm looking at faces that I've worked with for going on 30 years in some cases, and it's just an absolute treat. In the interest of time, we know that some people actually have had to leave and some people have to get back to work. So I'm going to hang around up here for questions if anybody has them, but I'm not going to put you all through the questions. I believe Anne we have a little gift on the way out. And once again, I just want to, I should shout out a couple people. I should shout out Caitlin for helping on the video. Thanks, Kate. Appreciate that. Thank you for Andrew for doing the photos. Appreciate that, Andrew. And I would certainly be remiss if I didn't highlight Brianna and Anne. Yes. And clearly, we should thank our host here, right? This is what a great venue. I mean, this is really wonderful. So thank you very much, guys. Feel free to stay and ask questions if you like. Otherwise, drive safe, and thank you for sharing your day with us.